5 stocks that U.S. investors are buying right now, but let's go look at the 5 most traded stocks they're looking at currently. Let's go. Mo, we sat here and at first you and I thought, oh, it's going to be the Magnificent 7, all those. I was actually surprised by the top 5 stocks by volume. Tesla, number 1, 126 million shares per day on average. Ford at 58.6 million. Amazon at 54.6 million. AMD at 53.9, Apple at 53.5. So Ford and AMD were really the ones that shocked me. Mm-hmm. What about you?
Especially Ford.
Yeah, especially Ford.
I don't know why Ford is in there.
No clue. I guess I really have no idea. Yeah. But then we want to take it a step further, guys, because at the end of the day, total volume doesn't really tell me much. If there's a stock that's $2,000 per share and a stock that's $20 per share, if they're both trading $2,000 worth, one is 1 share, one is 100 shares. So it doesn't really tell me much. So I went one step further. I went and sorted by the S&P 500 companies. Then I took their 30-day average volume and multiplied it by today's price to give me a total volume dollar amount, right? Mm-hmm. And then I sorted them by percentage of their market cap. So the reason I did that was I want to sit there and see how much of a company's market cap is traded every 30 days here, in the last 30 days. So as an example, let's say your company is worth $10 million and every 30 days, the total amount traded is $1 million. That's about 10% of your market cap traded every 30 days. And it blew me away, Mo. It absolutely shocked me. Look at this. Solar Edge Technologies was number 1. Market cap of $5 billion, traded $9.4 billion worth of stock in the last 30 days.
Never even heard of that company.
Okay, number 2. You've heard of American Airlines.
I have.
It's $8 billion market cap has traded $13.5 billion. So their entire market cap plus 68%, 168% of their entire value. Solar Edge was 210%. Nphase Energy, which we've done videos on.
Yep, we did on
a lot of volume there, 134%. Have you heard of Tesla?
Yeah.
That's not a shocker. 120%. And the final one, Norwegian Cruise Line, also shocked me.
So random.
So random. So what we're going to do now is we're going to evaluate these 5 companies. Remember, guys, when there's this much trading activity, it makes me a little apprehensive about going, are people really long-term investors when the entire company's market cap? And by the way, guys,
I'd venture to say those are traders.
Look at Tesla, Mo, $776 billion market cap, and it's traded almost $1 trillion in the last 30 days.
People are still loving it.
Still loving it. Again, guys, this is based on today's closing price. Some might be higher, some might be lower, but the point is it's a lot of trading. So when I hear people say, I'm a long-term investor, you might be right, Mo.
Yeah.
Maybe it's day traders and active traders trading in and out of these things, but it's still an absurd amount of trading.
Yeah.
So let's take it. Let's go to Solar Edge Technologies first. Solar Edge. All right, so here's Solar Edge. It's up to $80, 1.8%, all-time high of $389 just 2 years ago, Mo. So it's already down a ton. Here are the 8 pillars. Whew.
Bad?
Oh boy. We got 6 X's and 2 check marks.
Look at the shares outstanding.
Shares outstanding up 24%.
Look at the 5-year free cash flow growth.
Look at this, Mo. Their 5-year PE is 30. Their 5-year price of free cash flow is 340. That tells us that they're reporting a lot more income than free cash flow. And look at this, Mo. They report $217 million in net income and negative cash flow of $113 million, $150 over the last 5 years in net income, $13 million in free cash flow. It just means either this company is being shady or they're still in super growth mode and they have a lot of depreciation. So what would happen here is they're spending a lot of money for growth, buying things and expanding, but they don't depreciate them till later. That could be the case. What does Solar Edge do? Solar Edge Technologies designs, develops, and sells direct current optimized inverter systems for solar photo blah, 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 blah.
Go to their analyst estimates.
Let's go see this.
They're not as good as I thought they would be.
Oh, wow. Yeah.
Even
$9.40 per share in profit this year to $12.50 in 2028.
The revenue growth is awful. For a company that I would expect not to be awful.
All right. It's a pass for me.
Yeah.
Next company. American Airlines. Guys, airlines are tough. Airlines are tough. All right, so here we are at American Airlines. American Airlines is $12.30 per share, all-time high of $59 in 2018. Airlines are a tough business. Mo, look at this 5-year return on invested capital.
Yeah.
It's negative. Now, it included COVID in there. Okay. The recent return on invested capital of 18.5% is very substantial. Free cash flow in the last year, 2.2 billion versus net income of 1.6. Okay, not bad. Well, look at this. Price to sales ratio.
0.15.
0.15. Wow. PE of 5. Now, everything with actually, Mo, this doesn't look that bad. Here's what I don't like. Market cap of 8 billion, enterprise value of $68 billion. Guys, the difference here is debt.
That might be the biggest one I've ever seen.
Ever? In terms of percentage?
In terms of percentage.
Yeah, you might be right.
Yeah.
Very capital intensive businesses. It's very tough. Let's check out their 8 pillars, which isn't really going to tell me much. Cash flow grew. Not a shock there. Okay, estimates.
Pretty good. But again, recovering from COVID.
But I mean, look at December 2027. If they're able to hit $8 a share in profit, you're going to be very happy if you bought it for $12 per share.
Not a lot of revenue growth, but
a lot of shares outstanding increase, 42%. You know, this one's tough. This one's very tough. All-time high of revenue. Look at that. $53 billion in revenue.
In 2019, they had 442 million shares outstanding. Today, they have 554.
Yeah, it's a lot.
Yeah, they really diluted you during COVID.
They're back to profit, though, Mo.
That's true.
They're back to profit. COVID and a lot of airlines got hit by that. The question you have to ask yourself is, how did they do in the past? You know, every single major airline, except for like Southwest, has gone bankrupt at some point. I mean, a lot of losses in the previous decade. I mean, guys, I look at this going, if you believe American Airlines is going to make $8 a share in 3 or 4 years, why are you not buying it at $12? And that's what analyst estimates are saying. How do you not buy it at $12? Stock number 3, Nphase Technologies.
I'd rather buy jets.
Yeah, I think so. I think you're going to make a play on that. So again, Nphase traded about 134% of their value. Currently at $100 a share, all-time high of $340 just 1 year ago, December 5th, 2022. I remember the stock was going up 10, 20% a day, down 10 or 20. It was insane for a while.
Yeah.
We'd always see it in our trading charts. It was crazy. 8 pillars, shares outstanding are up a ton, 33%. Guys, if you're new to the channel, remember, when they're issuing shares, they're diluting you as an owner. It isn't increasing the market cap, it's hurting you as an owner. So you own a lot less of the business when they issue more shares. If a business has 10 shares and you own 1, you own 10% of the business. If they go to 13 shares, you still own 1 share, but now out of 13 shares, you've been diluted from 10% down to 7.5%, 8, whatever the number is. So you've been diluted by 25 or 30% just by doing that. So you have to ask yourself, is that worth it? Even if the company grows, is that worth it? Now, Nphase is a growing company. They might be, I still look at it going, I mean, they got great margins here. They got great free cash flow relative to their net income.
There's a lot of good things about it.
A lot of good things. Mm-hmm. But that capital allocation look at this 5-year return on invested capital, 25%. Guys, they do a great job of getting a return on the money that's invested in the business. You got to ask yourself, are they going to dilute the crap out of us? So before you buy Nphase, 1, make sure you understand what they do and if they're in terms of, are they growing? Are they still going to continue to grow? And 2, what is the company's philosophy on capital allocation? How do they want to fund their growth? Do they just want to dilute and dilute and dilute? Which could be okay. A lot of great companies started by diluting shareholders, but at the same point, at a certain point, you got to sit there and say, hang on, I need to make sure that as the company grows, I'm getting the vast majority of that by believing in them early. All right. Stock number 4, we all know it. It's Tesla. Guys, we've done 1,004 videos on Tesla. Tesla, we believe, is overpriced, 8 times price to sale ratio. I look at that and think to myself, the average car company is between 0.3 and 0.1. Price to sales is at 8. For those of you out there telling me it's not a car company, 85% of the revenue comes from cars. In the future, they may not be a car company, but as of right now, and their percentage of revenue from cars is declining, but it's still 85%.
Still massive.
And their other bets aren't really working out very well. The solar panels, the solar shingles.
It's not working. To this point, it's not working.
And then
didn't they put like 23 roofs on last year or something? It
was
a ridiculous
no way.
Number. Yeah,
really?
It was a ridiculous number.
And now Musk is telling everybody on Twitter to go F themselves.
God, he's so awesome.
He literally said that on an interview.
He said, go F yourself. And then he wrote, go F yourself. And then he was talking about Bob Iger, and he goes, hi, Bob, if you're in the audience. The guy's awesome.
He's Trump Jr. right there. Am I right? I got
awesome.
I got a laugh from Nick over there on that one. So guys, let me look up where we did stock analyzer on Tesla.
Okay.
Gotcha. So guys, Tesla, we did it recently, October 31st, about a month ago. I only did 10% for my desired return. I'm going to go put in 12, 13.5, and 15% analyze. Mo, my assumptions were 12, 18, and 24% revenue growth. That's big revenue growth.
Mine was 8, 16, 24.
Okay. Profit margin, I did 5, 10, and 15.
I did 5, 8, 11.
I think yours is probably better, but I gave them a little more. 5, 10, and 15 on free cash flow. PE, I did 18, 21, and 24.
Okay. I did 17, 20, 23. I could probably go higher.
I can't stress this enough, guys. Just because the PE is high now doesn't mean the PE will be high in the future. Don't fall for the Meet Kevin BS that 70 times earnings is a discount for Tesla because they sell for 200 times earnings. All right. And I did my desired return of 12, 13.5, and 15 because I didn't make higher assessments. I want to get my margin of safety. What'd you get?
I did 12, 15, and 18.
Oh, wow.
Yeah, I went high.
Good for you.
Mm-hmm.
I mean, 18% revenue growth for 10 years is a lot. Now, guys, you like the software. If you want to get access to our community of thousands of like-minded investors, we have a free trial, everythingmoney.com, 7-day full access free trial. I'm not asking you to make a yes or no decision right now. I just want you to make an informed decision, and you can do that by signing up for our free trial at everythingmoney.com. I hit the analyze button on Tesla, and stick around, guys. We still have one more stock to do. This is, to me, to show how overpriced the company is. Low price of 37, a high price of 265, a middle price of 115. So if to justify today's price, Mo, my assumptions have to be 24% revenue growth for 10 more years, which would take them, what did they do in revenue last year?
Let me go look.
Because I'll show you exactly what the revenue has to be then.
96 billion.
They do $825 billion in revenue in 10 years. And guys, they keep coming up with cheaper and cheaper cars.
They declined their price 10 times this year or something, I think.
Ask yourself, is that a reasonable assumption?
That's a ridiculous assumption.
What $800 billion value companies have grown their revenue 24% a year to justify their valuation? So I look at it saying, this is just an overpriced company. I get it. I'm not it's you guys are going to say it's a software business, blah, 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 blah.
Honestly, you can say it's a software business, but I don't know what software business is doing 800 billion a year.
They're not doing 800. Oh, you mean in 10 years? Exactly. In 10 years, I think they'll be, maybe.
Maybe, but.
Because Microsoft's doing what? Yeah, exactly. You're right. Yeah, exactly. No, you're right. No, you're right. Even the software business is hard. Oh, they're down $4 today. Okay, our final company is Norwegian Cruise Line. What is that ticker? CLH.
CLH, yes.
$15 a share.
This
guys,
is a rough one.
Look at the 8 pillars here. They're just terrible.
No,
don't even look at this. This is useless.
Right.
You got to decide, is Norwegian a good company to buy today based on the fact that the world has opened up? Let's look at their revenue over the quarters because I'm going to pull up their quarterly revenue growth. I mean, look at this, guys. In 2021, they had $4 million in revenue. And it is increasing substantially. So they're back to ships are opening up, revenue's coming in. Is profit there? Net income is finally in the positive. Oh my God, look at those negatives, all those quarters, Mo.
Mm-hmm.
Negative 700 million, negative 800, negative 1.6, negative $1 billion, negative 500. I mean, but now they're profitable.
Shares.
How many shares do they?
So in 2019, 214 million shares. Today, 225.5 million shares.
I see.
I'm sorry, 425.
Yeah, 400, but average diluted is 511.
Basically double.
By the way, I used to own CCL. I was lucky to make a profit on it, but guys, I sold it because my thesis was completely demolished. I didn't think they would take that much debt and issue that many shares, and they did. Same thing with Norwegian. Yeah, they all did it. Completely blew my expectations.
What's the other cruise line?
Royal Caribbean.
I think they did the same.
They had to.
Yeah, they didn't have a choice.
They had no choice. So guys, proceed with caution on Norwegian. Make sure you make sure you believe that they can stop diluting shares and get back to profitability and start paying down, maybe buy back some shares because
pretty good analyst estimates. I mean, if you believe them.
So analyst estimates are showing, oh wow. Yeah, if you believe they're going to get to $450 a share in 2028, you're buying it for essentially 3 times their profit in 5 years.
Mm-hmm.
Doesn't seem bad.
No, if it happens.
Guys, thank you very much for your time. Talk to you later.